Okay, we've got the Crane Corporation. They're using a job order costing system, and we have the 9 transactions you see on the top of the screen. So we're going to record them. So the first one says it purchased raw materials on account for $58,430. Okay, so when a company does that, what do? They debit raw materials inventory, increasing raw materials inventory, and they credit accounts payable because it was purchased on account. What does the second transaction say? Raw materials of 45,360 were requisitioned to the factory. An analysis of the slips indicated that 8,660 was indirect materials. So the rest must have been direct materials. Okay, so work in process inventory gets increased by 36,700. That's the difference between the 45,360 and the 8,660. But we're also going to increase manufacturing overhead for the indirect cost, because indirect costs don't go to work in process inventory directly in a job order costing system. They go to the manufacturing overhead account. Remember, all indirect costs go to manufacturing overhead. And then the credit is the full 45,360. Okay, what's the third transaction? Factory labor costs incurred were 75,520. Slide up a little bit. We can keep working this. All right, so if labor costs were incurred, we debit what I call a suspense account. It's just a temporary account, factory labor. The reason why I call it a suspense account is that account never shows up on a financial statement. By the end of the accounting period, we're going to clear it out and we're going to put those dollars somewhere, most likely to work in process inventory and to manufacturing overhead. Okay, so there's our 75,520 of factory labor. We would credit an account. Oh, it might be called payroll liabilities. Some companies might just call it wages payable. Different companies use different accounts. All right, number 4, time tickets indicated that 68,040 was direct labor, 7,480 was indirect labor. Let me slide up. Well, we still want to see that one. I'll leave it right here. What do? We debit the work in process directly for the 6840 for the direct labor, and the 7480 then flows into the manufacturing overhead. And the credit is the factory labor account we just used. Okay, see how we increased it for 75,520, and now after some analysis of what went into it, we clear it out. That's why I call a factory labor account a suspense account. It only exists temporarily. Never appears on a financial statement. All right, what's number 5 says? Number 5 says manufacturing overhead costs incurred on account were 101,430. Now, keep in mind that you won't just get one lump sum of 101,430. You would get a bunch of different items. One might be manufacturing overhead, indirect materials. One might be manufacturing overhead, depreciation on factory equipment, manufacturing overhead, outside services, manufacturing overhead, supplies. I mean, it could be whatever, electricity, utilities. They're simplifying this for you just to say, hey, we had a total of 101,430 flowing through to manufacturing overhead. So we would debit manufacturing overhead 101,430 and probably credit accounts payable. Now, if there were other accounts involved, like we were recording depreciation expense, maybe we'd have a credit to accumulated depreciation dash factory equipment. Okay, but we'll just use this oversimplification approach they're doing here. All right, depreciation on the company's office building was 10,160. All right, so what do we do on number 6? And this is probably the last one I'm going to work for you. Depreciation expense was 10,160 on the company's office building. This has nothing to do with manufacturing, so we would credit accumulated depreciation buildings, and it flows through to depreciation expense. Now, this is a separate period cost. This is different from an account that might be used called manufacturing overhead dash depreciation if we were using more than one manufacturing overhead account. Okay, this one is strictly the period expense. You know, it relates to selling and admin costs. It doesn't relate to manufacturing. You know what? We'll do one more. Okay, number 7 says manufacturing overhead was applied at the rate of 150% of direct labor cost. Well, how much direct labor did we charge in? I think right there is our direct labor amount, 68,040. So if we take 68,040 times 150%, we will get the answer to the next one, which is number 7, which is 102,060. Okay, so we debit work in process for 102,060. We credit manufacturing overhead. So sort of like a two-part approach. We debited manufacturing overhead for the labor. Now we credit manufacturing overhead and we debit work in process. Now this is the manufacturing overhead applied entry. Okay. In the real world, there is probably a good chance that they will use a separate account called manufacturing overhead applied. It goes with manufacturing overhead, but textbooks like to present this as if it's only one account. Well, we'll go ahead and finish this problem out. Number 8 says goods costing $110,880 were completed and transferred to finished goods. All right, so with that amount in mind, we would debit finished goods for $110,880 and credit work in process. That's our transfer to finished goods from work in process. Let me slide back up. What's our last transaction? Finished goods costing $94,500 to manufacture. So we've got, our cost accounting records. We know exactly which jobs were completed that makes up that amount. And $94,500 were sold for $129,780. So if we slide on down, we should see the sale. This tells us it's a sale on account because we debit accounts receivable for $129,780, credit sales, but then we have to record the cost of sales. Remember, we're always matching the cost to the revenues. Once we know what the revenues are, we match the cost to them, right? So they told us the cost was $94,500. We debit $94,500 cost of goods sold and relieve finished goods by crediting it for $94,500.